weekend. Ira Epstein of Linn Associates with your weekend edition of your financial market wrap-up. And this is for Friday evening, and we are now on February 5th, 2021. Big event. The event took place Thursday night and today, and you're going to say to me, what is it? Nah, it's not about GME or AMC or costs or any of that craziness that went on a week ago. It's more as to how the Senate was controlled yesterday in votes to get the COVID relief bill done. It was a split vote, and then Ms. Harris, our vice president, broke the tie. And then today, it's what President Biden said. At 11:30 this morning, he held a news conference to put to bed any questions about what is going on in terms of the $1,400 check and his COVID package. Those checks are going out. Simple. They're not going to be $1,000. They're not going to be cut down. They're $1,400. So basically what he is saying is his plan is going to go through. He then said he wants to move on to the next plan, and he looked at Nancy Pelosi, the infrastructure. With that, you held on to the gains in the metal markets, because yesterday we had a pretty good idea at night what that would do, and it just carried through the rest of the day. All metals sharply higher, including copper, which is saying, hey, you're doing infrastructure, you need me. So you got that. The dollar down. Where are we going to get all this money from? Well, we're going to issue debt. Bonds and notes going down. Makes sense, right? Stock market likes that. And what about energies? Hey, this sounds great. You guys are going back to work. Does that make sense to you? Because basically, that's what went on. Now, if you take a look at a monthly area chart of closes, it's pretty good. We're up 4% for the month. You know, I remember when making 4% in a year was a great thing in the stock market. Now you're 4% for the month. That sounds like a lot. We're only on February 5th. When I come to the weekly charts, because they're at the same time frame, you're going to be that 4.7% increase, but you're at a new all-time high here. You're at a new all-time high. Come on. Anybody that's been bearish this market with all the worries and people saying a 15% break and all that, I agree with them. That's number one. But until it's here, it's not here. And if you played that it's coming, where were you playing for it? Here? Were you playing for it here? Were you playing for it here? You can't do that. You have to accept in your investment strategy that when it comes out of left field typically. It just sets in and you're caught in it. So you want to be certain of the things you own at any point or things you want to own. That's the way to look at it. And what you're going to speculate with, you're going to speculate with. When I take a look at the chart, pretty interesting, because as I look at it, new all-time high, but we had an outside week up. You know the importance, and if you're just watching me and you haven't seen me, I think outside days are extremely important, or outside weeks, for a period of 2 bars. Now, on a daily chart, that's 2 days. On a weekly chart, it's 2 weeks. That's what a bar is. So until this is taken out, if it were taken out this coming week or the week after, I would think we have a top formed in the market and that we're going to go down. If on a daily chart it did it, I'm not saying it had that pattern because I'm not displaying it, same thing. Got it? That's one of the things I look at. So I'd mark it on my chart. If you're just watching and you're just learning some of these, it's a technique that us chartists, at least I use a lot. Now you're up here, so where might the resistance be? I know the support's back here, and here's what's interesting. If you look last week, the 18-week average was 36.06, the week before 35.83, and then 35.56. It's moving about 28 to 30 points a week. That means we're going to be ideally around the 36.60, 36.56 to 66 level. That's going to be over this week's break low of 36.56. That's another sign the market is still bullish. What you want to see on pullbacks, ideally, is things that keep the higher low, higher high intact. Does that make sense? And that's what I'm hoping we eventually get. So you're going to get up there, and I think that's going to be a fascinating part to it. Where's the resistance? The upper Bollinger Band, the 39.48 area, and that'll move up a little bit. What about momentum? This is the story of the market. I come from the theory, and I teach the theory that momentum leads price. not price leads momentum. Therefore, I am looking that when you're embedded until the red line closes back under 80, what are you? You're keeping a bullish posture and you're buying on breaks. Now, how do you do that? There's a key moving average I don't show you here. I do it only for my subscribers and I walk them through it on a regular basis. It's already posted on the website. So I've already done one of them for the Spider ETF and I'll have the other one knocked off by the morning for my regular subscribers and futures where the weekend editions are out. I cover all the charts with it. This market's still been a buy all this time is what I'm saying. And the target, still that upper Bollinger Band. In the NASDAQ, we still have the pattern of higher lows. I should have had this arrow over here, but it's higher lows, higher highs, embedded reading, target 13,709. So you'll say to me, Ira, what happens when you hit that upper Bollinger Band? I think the pros take some money off the table. They did it here. They did it here. Now here, just look. First hit, right here, pull back. Hit, pull back. Hit, pull back. Ran it. Now, I'll walk you through running. It's when you hit it each day and you're not breaking yet. Eventually, you pull back and you back away from it. And in a bull market, you continue up. So why would that pattern change? Until it's changed, don't assume it's changing. Go with the pattern, and that's what I see. In the industrials, you have the embedded reading. So this has been the weakest of them. Why? Because it went back to its 18-day average. But the low of the week was 29,552. What's the line in the sand where the markets often correct to? The 18-week average. It held it with an outside week up. On this chart, again, I don't want to see this week's low taken out in the next 2 weeks. As long as it isn't, and as long as you keep the embedded reading, why not get back to the 32,000 level? That's a target number. In the Russell, higher lows, higher highs. Again, that moving average that I don't show everything here because that's what my subscribers get. They're paying for more things. And you can see where it's at. Until you take out this week's low, fully committed to the bull camp. Bonds. Okay, let's throw the name off the chart. You're at a key support level of the 100-week average in green and the lower Bollinger Band. The market is not embedded. I think the pros are taking money off the table. I think they took their first money here on the bounce. I think they might have sold. I certainly wouldn't have because the market was oversold on a weekly basis. But down here, I think you've grabbed the chunk of the money. Certainly not all of it, but that's the first support in how long of that 100-week average. I'll let you take the gravy after that. This is where the fillet is. That's the part I want. 10-year notes, not the same. 100-week average is way away. Market is oversold. Trend is down until you take out 137.20. But you're at the Bollinger Band. It is not a sell zone. It is a zone where on rallies maybe you get your short sales on the daily chart, but I'm not a keen fan of selling into a Bollinger Band. And on the dollar, I've been looking at a market, and I've said it to you, this is a contra-trend rally because you've kept the bias down. And markets, when they bottom out, it's often accompanied by losing the embedded slow stochastic. Look. When that occurs, you often make a run for the 18-day average of closes. A run means you try to hit it, but you get pretty darn close. I've been walking you through this. What did you do this week? As far as I'm concerned, the bell's rung. I think the people that played for the contra trend are sidelined now, and they're waiting to see what the next trend of the market's going to be. That's how I'd be viewing the weekly chart. And I'd flip it around 100% on the eurocurrency. The contra trend break to it, market working itself, still in an overbought condition. Any reading over 70 is overbought. We'll have to see if that loses it when the market reopens Sunday night or not. But I think you're at a zone where I don't want to press that market as a bear, a contra-trend bear. That doesn't mean that they won't, but that's me. In the Canadian dollar, you had lost the embedded reading. Now, let me show you. Here's the numbers. They're going sideways over 80 for several days. Then you lose it. Often that means a run for the 18-day average of closes. You haven't quite completed it. So we'll see. That's not complete as far as I'm concerned. I think the market owes that number. So I'm bothered by that. And it's an overbought condition on the weekly chart. Japanese yen, first challenge of the lower Bollinger Band. Come on, let's assume I've got a chorus here. Cover the short. When we do our webinar, my live webinar, which I owe you one this month. I didn't want to do any in January, but I will hold one. I do that. Raise your hands. What do you do the first time you hit it? And I'll make you answer the questions because it drills it into you. I don't care if it goes lower. This is the gravy. You play for the remainder. Only 5% of the time do you stay below or above that number. It means 95% of the time you're not going to be right. Bitcoin, still bullish, but now is it embedding on the weekly chart? Both numbers over 80 on the weekly, not the week before, the week before. You're overbought on the weekly, clearly in an uptrend. You got to go to the daily charts to see if you should be playing that or not. On Brent, this is the first time that we've gotten the market to crack back under the 18-week average in quite a while. It hasn't done it since back here at the November time frame. So the differential between the two tightening up. We did add more rigs. I think it was 8 this week, 4 natural gas and 4 crude rigs, according to Baker Hughes. So we're adding the rigs. They're back up nicely. Total rigs like 390, but it's going to be a while. We're going to bring them back on, and contrary to what you hear, there's money available if you've got a drilled well and you got $60 oil that you can hedge. What bank isn't going to give you the money to just pull it out? You could hedge it and sell it on the open market right now. So they'll be doing that. As we take a look at Brent, market still moving to the upside. Saudi Arabia has done a great job of controlling the production here. It had to eat a lot of barrels, but it's driven the price sharply higher on the barrels that it's not selling, and that's good news. It's still quite bullish. And I'd be careful here on the weekly WTI crude. Why? What's going on? First challenge of the Bollinger Band again. When you hit it, I look for sideways to lower action to develop. Same in the gasoline. Bullish embedded reading. I've been prepping you that the market doesn't wait for the springtime to make its move. It makes its move February on, so you've got to pay attention to the seasonals there. I hope that has helped everybody. Remember on the weekend what I do. I publish for my paid subscribers all weekly charts on over 40 commodities, and I'll revert sometimes back to the daily to show them what I'm seeing back and forth. I give you a lot of ideas as to what I'm seeing in the marketplace. I do my daily charts at 5:40 a.m. I start recording them. That's Chicago time, Central time, and I cover swing trades and long-term. I had a gentleman write me today, say, Ira, I'm a long-term trader, really don't want the dailies. Well, you need the dailies. The dailies tell you when the weekly is making a change. You don't want to do a weekly chart video every day of the week. It's like watching, if you will, it's basically like watching paint dry on the wall. They set into a trend. You're going to risk typically a bit more money than on the daily chart because it's a longer time frame, but you're waiting for it to go and the two tie together. They're very important. I used to think, well, all I have to do for my longer term clients is watch the weekly. It proved wrong. So how do you get this? It's simple. You go to our website. It's fully explained under the word research. Give yourself a try with it. I'm Ira. You have a good day. I'll see you all tomorrow.